Everybody, it's Bobby Nahum here with AMAC Real Estate Company. Hope everybody is having a fantastic start to your year in 2026. We are back to talk about residential real estate here in Leon County, Tallahassee, Florida. We're going to look at some real estate metrics from the fourth quarter of 2025, some important real estate metrics, and we're going to compare those to the fourth quarter of 2024, and we're going to kind of get an idea of how our market's doing compared to a year prior, and kind of give you guys an idea of the direction that our real estate market's going in, how healthy it is. We're going to be looking at some important information like home sales, the number of properties listed for sale. We're going to be looking at home prices and some other important metrics too. And I'm also going to be talking to you guys a little bit about some more broad economic and real estate related things that are going on around the country that have an effect on our local real estate market. And we're going to be looking ahead to kind of get an idea of where I think the real estate market is headed in the next few months. And then also going to give you some tips on what you can do and how you can succeed if you are buying or selling in today's real estate market. So it's going to be a great video. We got a lot of good information. It's going to run a little bit longer today because we've got a lot of stuff to go over. But stick around for the whole video and hopefully you'll learn a lot. So basically in the fourth quarter of 2025, we kind of had a mixed bag of good and bad news. So start off with the good. The good news is that overall activity was up. So the number of properties that were listed for sale went up, and the number of properties that sold also went up. And also we saw an increase in home prices in the fourth quarter, which was a reversal from what we had seen in the second and third quarter of last year, where we saw year-over-year price declines in the second quarter, and then the prices were kind of flat in the third quarter compared to a year earlier. So the bad news is basically the number of listings went up at a faster pace than the number of properties sold. So what that means is that even though overall activity was up, supply growth exceeded demand growth, which means we shifted into more of a buyer's market in the fourth quarter of 2025 than compared to a year prior. So also, even though the sales pace went up in the fourth quarter, it was still extremely slow historically. So we'll talk about more of that later. So let's just go ahead and jump into listings. So the number of properties that were listed for sale in the fourth quarter went up by 11% compared to a year prior. So this is good news for home buyers because that means home buyers have more homes to choose from. It's also going to put some downward pressure on price growth, which is good because we need the affordability. We need affordability to get a little bit better. Actually, a lot better. So that's the good. That's the good thing about that. So now, while the housing inventory did go up, historically inventory is still pretty low. So we're still running about 10 to 15% below the number of properties listed for sale in the pre-pandemic years, 2017 through 2019. So we've still got some catching up to do. We need more properties on the market. If you talk to home buyers, even though inventory is better than it was a year ago, the complaint that you get is, man, there's just not really a lot out there. And so we still got some room to go in the inventory department. We're seeing more homes come on the market, but we're headed in the right direction. This is the way it appears. So I would expect inventory to continue to go up in the next few months. Actually, probably throughout the rest of the year, we'll probably see that trend continue with rising inventory levels. So, and the main reason that I believe we're starting to see more properties come on the market is we're finally breaking from what I call the gridlock that's caused by the rising interest rates. So I'll kind of explain that. So basically, a few years ago, prior to 2022, interest rates were basically hovering around 3%, the low threes. I think they even got down into the high twos for a 30-year fixed rate mortgage back in 2020. So most people have mortgage rates that are a lot lower than what they are today. So as a result, A lot of people that would normally sell their house over the past few years in order to buy another house have been holding off because they don't want to trade off a 3% mortgage for a 7% mortgage. Well, what's finally happening now is interest rates are starting to come down. A couple weeks ago, we saw interest rates finally get down to about 6%. I think they even went under 6% for a short period of time, and right now they're hovering at about 6% to 6.1% in that range right now. So now that we're seeing rates come down, you're starting to see more people who are just deciding, hey, I got to get on with my life. I'm going to go and sell my property and, finally buy something else. So that's why we're having more inventory come on the market now, and that's why inventory is going up. And I believe that as the year goes on, we're going to see rates come down a little bit more, and that'll even accelerate more of the inventory growth. So that's what I would expect to see. Home sales. So home sales went up by 9% in the fourth quarter, and on the surface, that seems like great news. And it is, because we need home sales to go up. But when you look at the whole picture, it's not as good as it might seem when you first hear that 9% number. So even though home sales went up by 9%, listings went up by, the number of properties listed for sale went up by 11%. So the number of homes that are on the market, that number exceeded the growth in property sales. So even though home sales went up, we still shifted into more of a buyer's market. Now, the other thing is that even though we're headed in the right direction, home sales are still incredibly slow. So right now we're running at about the same pace we were in 2013 to 2014. We're a little bit higher than we were in the fourth quarter of 2013, but we're still considerably under where we were at in the fourth quarter of 2014. So sales pace are still very slow, and when you account for the fact for population growth, it's even actually worse than it seems, because we have more people, we have more homes in Leon County now than we did back in 2013, 2014. So even if nothing changed, you would expect home sales to go up. So we're actually even below that pace when you factor in for population growth. So bottom line is we're still at a very slow pace for home sales, and we're at still about 25% below sales numbers that we were seeing in the pre-pandemic 2017 through 2019 years. So we're still well below that average. And that time frame, the reason I keep referencing that time frame is because that was a pretty normal time in terms of listing inventory, in terms of home sales and all that stuff. So we're still well below that, so we've got some room to go. Let's see what else. So I do think home sales will start to go up, but it won't probably be for a few more months. So basically, over the next couple months, next month or two probably, we'll still see home sales continue to be at a pretty slow pace. I think by about March or April, what's going to happen is you're going to start to see home sales go up. And the reason that's going to happen is I believe, twofold. So number one, the big beautiful bill, which was a tax bill that was passed last summer, part of that was tax breaks. So there's going to be more tax breaks for average taxpayers in that bill that went into effect in July and will apply to people's tax returns from 2025. So once people start getting those tax refunds in March and April, they're going to be bigger than they were last year. So you're going to have people with more money from tax returns, and then going forward, because the tax rates are going to be, or the tax withholding will be less, you'll start to see people's take-home pay increase, because going forward they're going to start taking less out of their paychecks for withholding. So the combination of less withholding for taxes going forward and the bigger tax refunds is going to give people more money in their pockets, and they're going to spend that money, and people that are looking to buy homes, it's going to be easier for them to do so because they have more money. So the other thing is interest rates. So I think that the interest rates will probably not go down until May, but what happens in May is that basically we have a new Federal Reserve chair that's going to be put in, and he's probably going to be more prone to try to reduce interest rates to get the economy going and get the housing market going. So I think once that happens, that will also have an upward effect on home sales. So I would expect in late spring, early summer, we'll really start to see the housing market sales numbers going up. All right, so and just one last thing about sales and why they're so slow. So the main reason we're still seeing a persistent slow housing market is because of housing affordability. So between 2020 and 2024, in Leon County anyway, home prices went up by about 50%, which is a huge jump. And then to add to that, you also had mortgage rates more than double between 2020 and 2024. So I think the combination average of the two, the increased prices and the mortgage rates, caused people's average mortgage payment to go up by around 80% compared to 2020, early 2020. So during that same time period from 2020 to 2024, people's wages only went up by about 20 to 25%. So what that means is that home buyers, compared to 5 years ago, 6 years ago, they have much less buying power on average than they did. So what it's going to take for home sales to get back up to a normal level is we're going to have a few years of consistent wage growth that's outpacing both inflation and home price growth. So, but we're headed in the right direction, so that's a good thing. We just need a few more years of it. All right, so home prices. So home prices were up by 4%. Average home prices were up by 4% in the fourth quarter compared to the year prior. Median home prices were up by 1%. So, and then basically the price increases that we saw in the fourth quarter, it was probably fueled by declining mortgage interest rates. And like I said before, the increase in home prices we saw in the fourth quarter was a reversal of what we saw in the second quarter and the third quarter of last year, where we saw decreasing prices by about 4 or 5% in the second quarter, and then home prices were kind of flat in the third quarter. So now, with that said, prices are still a little bit below where they were at the beginning of 2025, at least in Leon County. Now, it should be noted too that while Leon County as a whole saw home prices go up, there were certain parts of the county, certain quadrants that we saw home prices go down. So the northwest quadrant, home prices were down, and also in the southeast quadrant, home prices were down in the fourth quarter compared to a year ago. The overall increase in Leon County and home prices going up was highly influenced by the increase in home prices we saw in the northeast quadrant. The northeast quadrant makes up about 50% of overall home sales in Leon County, so it has a big influence on the overall direction of home prices countywide. So it's just something to note, especially if you own property that's in the northeast, or if you own property that's in the southeast or the northwest. It's good to know what's going on in that specific area so that you can price your home and have a good strategy for marketing and selling your home if you're looking to sell your home. So the sale price to list price ratio was 97.7% in the fourth quarter of 2024 or 2025, and that's down. It's down from 98.31% in the fourth quarter of 2024. So the sale price to list price ratio is basically how much a home sells for compared to its asking price. So if a home's listed at $100,000 and it sells for $98,000, then the sale price to listing price ratio is 98%. So right now we're at 97.7%. Average days on the market. So for a home to sell, now this metric took me by surprise. So we had a huge jump in the average number of days that it took a home to sell in the fourth quarter. So it actually increased by 28.6% in the fourth quarter of last year compared to the year prior. So the average number of days it took for a home to sell were 72 days in the fourth quarter of last year, and that's compared to 56 days the year prior. So, and I was going back and looking, when's the last time it took that long to sell a home on average? It hasn't been since late 2016 that it's taken that long for a home to sell. So almost a whole decade. We're at almost a decade high of average days on the market for a home to sell. And I was really shocked to see that large of an increase, but it's basically the reason why is because of the consistent increase in the number of properties on the market and persistently slow demand. So if you're selling your house, you just have to be a little bit more patient in today's market because it's going to take a little bit longer. Distress sales made up only 1.9% of total sales in the fourth quarter of 2025. And that's down just a little bit from 2.8% in the fourth quarter of 2024. So again, distress sales are usually foreclosures or short sales. They can be other types of sales like bankruptcy sales, tax deed sales, divorce settlement sales, etc. Any type of sale where the sale itself lends to the property selling for under market value can be considered a distress sale. And distress sales in Leon County are so low right now that they're basically not having any real effect on our real estate market. All right, so to recap what we saw in the fourth quarter here in Leon County, we had some positive and negatives in our local real estate market. Again, the positives were overall activity for sales and listings were up, and also home prices were up. The negative is that even though activity was up, we shifted more into a buyer's market because the supply of homes exceeded the demand for homes. And also home sales are still extremely slow due to strained affordability. So going forward, I would expect the housing market to remain sluggish for the next few months, like we talked about earlier. Probably by around March or April, when those tax returns start coming in, we're going to see activity pick up. And again, like I talked about earlier, going forward, since people's taxes are going to be lower, the withholding from people's paychecks will be less, so people will have more take-home pay in the later part of the year. Let's see, and then also, like I said, we'll be getting a new Federal Reserve chair in May. Interest rates will probably begin to go down a little bit more after that. So I would expect to see, probably once the new Federal Reserve chair takes office, they'll probably do an initial drop of 0.5 point, and then I think later in the year we'll probably see another 1/4 point drop in the federal funds rate. And then by the end of the year, we'll probably see mortgage rates dip down to around 5.5%. That's my prediction. So the question going forward, though, is that even though sales are going to go up, the number of properties sold, is it going to go up at a faster pace than the number of properties listed for sale? And that's the huge question. I don't think there's any doubt that both of those are going to go up, but which one will go up more? If sales go up more than the number of properties listed for sale, we'll see the market shift to more of a seller's market. Sellers will start to reclaim a little bit more negotiating power that they've lost over the last year. If it goes the other way and listings go up more than sales, then what we can expect to happen is it's going to become more of a buyer's market like it has been over the last year. So we just have to wait and see what happens. So things to pay attention to, I would definitely pay attention to inflation, and as well as pay attention to the job numbers, because both of those things are going to have a profound effect on interest rates. So if inflation goes up, then we are more likely to see definitely no more interest rates cuts, but they may probably just leave the rates where they're at now. If inflation continues to go down, I think it's at 2.6% right now, which is good, but it's still got some room to go down. If it goes down to 2% or close to 2%, we can likely expect to see the Federal Reserve continue to reduce the federal funds rate because they're not worried about inflation anymore. The other thing to look at is jobs. So the Federal Reserve also looks at the job market to determine what they're going to do with rates. So basically, if right now the job market is kind of soft at the moment, there's not a lot of hiring going on, there's not a lot of firing going on, and there's not a lot of people moving jobs right now. Things are just kind of staying put right now, which is not the worst thing in the world, where there's not like mass layoffs going on, but it's just kind of a little bit in a rut right now. So, but if the job market improves, companies start hiring again, then we might see the Federal Reserve pump the brakes on reducing the federal funds rate. If it goes the other direction, if the job market stays kind of in a rut or gets worse, then we may see the Federal Reserve reduce the federal funds rate to stimulate the economy. So, like I said before, I think what's likely to happen is I think the federal funds rate will remain unchanged in May, and then we'll see some drops later in the year, and mortgage rates will probably go down to around 5.5%. So let's see what's next. So there are a couple economic wild cards that I would look out for. So these are things that if they happen, then they could basically throw a wrench in all these predictions I'm telling you about. So the first one has to do with the tariffs. So there is a court case going on right now in front of the Supreme Court, where the Supreme Court is going to rule whether the White House's and President Trump's tariff policy that he's been implementing is constitutional or not, or legal or not. So this is kind of a big deal because our current tax policy and a lot of the economic policies that are in place right now are centered around tariffs. So especially manufacturing and tax policy. So if the tariffs get striked unconstitutional and we can't do the tariffs anymore, then that's going to have a negative effect on manufacturing jobs. It's going to have an effect, I don't know what the effect is going to be, on tax policy, and it will also have just a general effect on the stock market and the overall confidence of the economy overall. So I think it'll be negative if it gets struck down. If that happens, it's kind of hard to predict what will happen exactly, but it will definitely throw a wrench into all of these predictions I'm making, that's for sure. The other thing has to do with health insurance. So there's kind of not a lot of people are talking about this right now, but it is going on. So last year, Congress did not vote to renew healthcare subsidies. So healthcare subsidies are basically it's taxpayer money that's used to pay for insurance, health insurance for people that make under a certain amount of money. And a lot of people who have health insurance get tax subsidies to help pay for their health insurance. And now they don't have that anymore. So you're having a lot of people they're canceling their insurance policies because they can't pay for the health insurance. So you have less people paying into the health insurance market. And what's happening is that these insurance companies, since they're getting less revenue from people dropping off, they're increasing the premiums by a lot for those that still do have health insurance. So that's eating into people's take-home pay and their disposable income. And obviously, if this remains, then without anything happening to fix it, you're going to see less people be able to buy homes because more of their money is getting eaten up by health insurance. So I do think that Congress will probably fix this because it is kind of a loud issue right now that a lot of people are complaining about. But the question is how long will it take, and who knows. If it doesn't get fixed, then that will obviously have a negative impact on the housing market. So we'll just have to kind of wait and see what happens with that. So some tips on buying and selling. So if you're buying in today's market, basically what you need to know is that the market has shifted into more of a buyer's market over the last year. So you have more negotiating power, and you have a little bit more time to be deliberate about your home purchase and to think a little bit more about it. So, but if you're a buyer, my tips are learn your market. Always look at the comps when you're deciding to make an offer on the property. Make sure that the offer you're making is in line with sales that have happened within the last few months, and also within in line with what other similar properties are currently under contract for. And you also need to look at what other properties are out there that are competing with the house that you're interested in, because all these things you need to look at closely to determine the market values to make sure you're not overpaying in today's market. The other thing is, if you're a buyer, have your pre-qualification letter, and actually get a pre-approval letter, not just a pre-qualification letter. Pre-approval letter is where the lender actually verifies your assets, your income, and your credit, and it just looks better to sellers because they know that your financing is solid and you're less likely to have a contract canceled because you get denied for financing. So it just looks good to a seller, and it will give you the upper hand, especially if you're competing with other buyers that are wanting to make offers on the house. So learn your market, be intentional about your home purchase and have your financing ready. So that's my advice if you're a buyer. If you're selling in today's market, you definitely need to be realistic about pricing your property. You need to understand that the market has shifted over the last 12 months in favor of buyers. There's more homes out there you're competing with. So the importance of really analyzing the market and looking at what has been selling, what has been sitting, and pricing your house according to or in accordance with those similar properties that have sold. And you've got to look at, all right, these properties that have recently sold, what were they listed at? And then it's very important to look at what other properties you're competing with too, because if you're in a declining market, what sold 3 or 4 months ago may not be worth what it is today. You need to really look at what other properties are currently under contract right now, what the prices are of those properties, and you also need to look at what other properties your house is going to be competing with to determine what buyers are likely to pay for your house in today's market. And then also you need to make sure that your house is ready to go on the market. You don't have to do full-scale renovations, but you need to definitely repair things that are broken. You need to make sure your house is clean, and you need to make sure your house is decluttered and that the yard is looking good and has good curb appeal. And then also in today's market, if you're selling, you need to really not cut costs on marketing. In today's market, you've really got to spend a little bit more money on marketing in order to get noticed. So good photos, virtual tours, email marketing campaigns. Your agent needs to be marketing to not only buyers but also the other realtors, because realtors, 90% of transactions have a buyer's agent. So you need to be marketing to the other realtors too to get your house sold. And then also you need to have a social media presence, and people need to be seeing your house on social media. So, and then also you got to be patient in today's market when you're selling, because homes are taking longer. Even if your house is priced right, it may take a little bit longer. And even if your house is priced right, you still probably need to expect that it's going to sell for a little bit under the asking price. In today's market in Leon County, the average sale price to list price ratio is 97.7%. So even if you're priced right here in Tallahassee, you can still expect your house to sell for 2 or 3% less than the asking price. So, all right, and that's pretty much it, y'all. I hope you guys really enjoyed this video. If y'all have any questions, feel free to reach out to me. You can email me, you can call me, you can text me, leave a comment on this video. And as always, if you guys like this content on on my channel, please subscribe to my YouTube channel and hit the like button on this video. And thanks, and I will talk to you guys again in a couple months. Thanks, bye.